$7 trillion wall of cash? Worry is looming for investors once Fed interest rate cuts start. If you're an investor in the stock market, listen up. This is a great article I was reading this morning, and I want to break it down for you. Investors who park cash in money market funds and other high-yield savings accounts have benefited from the interest rate hikes of recent years. I know my emergency fund has been making some nice interest. There's over $7 trillion in cash equivalent investments that have offered an attractive return for no market risk. And while much of that money is institutional or emergency fund savings, some shift out of cash equivalent assets can be expected as the Fed begins to cut rates. I'm just over here waiting on the Fed. But Wall Street's wall of cash theory, which contends lower interest rates will lead to a flood of cash into stocks and drive a new rally, has been debunked many times. As the Federal Reserve prepares to cut rates for the first time this year, maybe as much as 50 basis points, a policy shift that will, over time, reduce the yields on risk-free cash equivalent investments. You know, like those high yield savings accounts. The article continues to talk about all this money on the sidelines. A lot of people have money in high yield savings accounts right now. It is pretty much worry-free, earning over 4% interest. And if that number starts coming down, people are going to look for other alternative ways to make money. Like I've been talking for a while, real estate investment trusts or REITs. So is this going to drive a new market rally? The article says no, but I always like to think maybe. Drop a comment below with what you're going to do with your money that's on the sidelines and give me a follow so we can stay in touch.